Today, we're going to talk about credit scores and how we got into the 800 Club. Before we start, destroy that like button, and if you haven't yet, please subscribe to our channel. So what is a credit score? It's a number between 300 to 850 that depicts a consumer's creditworthiness. The higher the score, the better a borrower looks to potential lenders. Lenders use this to evaluate the probability that an individual will repay loans in a timely manner. According to Experian, the average American has a FICO credit score of 703. In this video, we'll help you beat that average. Why is it important to have a good credit score? It's going to be easier for you to find a bank or a credit card company to lend you money at an attractive rate. The lower the rate, the more you save money. For example, someone with a score of 625 could get a rate of 4.125% versus 3.625% for someone with a score of 750. For a $200K 30-year mortgage, the person with a 625 credit score will be paying $20,520 extra over the life of the loan. Your credit score can also affect how much the bank is willing to lend you. If you have a bad credit score, then you won't be able to borrow as much and you'll need a higher down payment for a house. This can also affect your vehicle and homeowner's insurance premiums. The better the credit score, the lower premiums you have to pay. Some cable and internet companies require your credit score during application. If you have a good score, you get better terms. Some dating sites use credit scores to match couples. So if you want to be matched to a fiscally responsible date, make sure you are also creditworthy. From a practical standpoint, you don't need to have a credit score in the 800s. In fact, a score of 760 will likely get you the best deals. Belonging to the 800 Club is really just a bragging right. So what factors affect your credit score? This is a pretty accurate, yet still relative view pulled from our Citi account that we wanted to share with all of you. Let's dig in on some details. Payment history, 35%. A single 30 or 60-day missed payment can hurt your score significantly. A 90-day missed payment is more damaging and could disqualify you from certain loans. The amount you owe relative to your available credit or your debt-to-credit ratio has a 30% weight on your credit rating. The amount of debt you're using on each individual card matters most, though average use across all your cards is important too. Length of credit history, meaning the average age of your open accounts, weighs in at 15% on your credit rating. Don't close your oldest credit card. That's what gives you a long credit history. Sometimes banks will close an old credit card that never gets used, and to prevent that from happening, we charge those cards a 50-cent Amazon gift card every year. Hard inquiries weigh in at 10%. This will temporarily cause your credit score to dip a little bit, but it will recover in a few months. The last thing we'll mention that affects your FICO score is the type of credit. Examples are credit cards, auto loans, and mortgages, and that weighs in at 10%. Lenders want to know you can handle multiple kinds of credit responsibly. Matt had no credit history in 2010, and when he applied for his first credit card from our credit union, his account opened with a $500 credit limit. That's all he had when he started, and he used that to start building his credit history from nothing to a score of 800 plus. So how did Matt increase his credit score? First, he made sure to not miss any payments. Everything was automated to pay the cards in full every month. Second, he did not buy things he couldn't afford. Doing otherwise would have increased his debt-to-credit ratio and potentially caused him to miss payments and ruin his credit score. The third thing was a side effect of travel hacking. He became interested in travel hacking and started applying for credit cards with juicy sign-up bonus points, which he then used to book free flights and hotels. If travel hacking isn't your thing, you can apply for cards that offer sign-up bonus cash. This gave him more credit and increased his credit-to-debt ratio, which in turn increased his credit score. Now, if the cards you use have annual fees and you think it's not worth paying for them going forward, ask the bank to downgrade it into a no annual fee card. Do not close it because you will lose your available credit and credit history. The fourth thing Matt did was to request regular credit limit increases. For Citi credit cards, he applied for a credit limit increase every 6 months. This is a soft credit inquiry, so it won't affect your score. They usually give a credit limit increase of about $3,000 every 6 months. He then sets reminders in Google Calendar to stay on track. By asking for credit limit increases regularly, we've racked up a total credit of $455,000 that dwarfs any debt we have on our cards. The fifth and final tip we discovered by accident. One Matt added the other Matt as an authorized user to one of his credit cards that had a longer and older credit history. That in turn allowed Matt to lengthen the average age of his credit history. So there you have it, our best tips on how to improve your FICO score and join the 800 Club. Share your tips in the comments below, and remember to ignite the YouTube algorithm by subscribing and scorching that like button.